And good morning, everybody. I am Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group's event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today, we have a great show for you. I am going to interview Matt Ratliff from Investiquant. If you're logged in right now, scroll down a little bit. You're going to see the quant stats. You can scroll through them. We'll explain what that means. We're going to try to figure out whether or not we can get an edge from that. Today's broadcast is brought to you by Tradeovate, which has a custom app dedicated to trading CME Group event contracts. That's what we're all using at Place Your Trades. And over the next month, we're going to give away a trip to Las Vegas. One winner will join the PYT team at the Money Show on April 24th to 26th. I'm going to be there. All you have to do is go to placeyourtrades.com/Vegas and sign up before March 1st. On March 1st at 4 p.m., we will have a special show for you, and we will spin the wheel to see who wins the trip to Vegas. I shared a little bit of a screenshot last night. I was looking through this, and I was like, what are these stats? I like anything that can give me an edge. I like it. So what I do as part of my weekly preparation is I go through and I try to figure out whether or not the week is going to close bullish or bearish for pretty much everything that you see traded here. And then I sort of try then to use my levels on top of that. So what I feel like these stats are is sort of the same thing, but on potentially a daily basis, and then using their proprietary technology to do that. So with that said, I'm going to bring in Matt Ratliff. And hi, Matt.
Hey, Julia. How are you?
I'm very well, thank you. How are you?
I'm doing great. Thanks for having me.
Oh, you are welcome. So I guess, first of all, just so people know where these things are coming from, tell us a little bit about Investiquant, how long you've been doing this, like that kind of thing.
Sure. So Investiquant started in 2008, most notably with our CEO, Scott Andrews, who is a gap trader. He started a company called Master the Gap, which I'm sure a lot of your traders that are viewing has probably heard of, trading gaps. And after a few years of having good success with that and clients enjoying it, they came to him and said, hey, why don't you make this bigger? Give us more opportunities. So he raised a couple $1 million from some clientele that were trading his trade calls and built out Investiquant. And from there, he was able to expand the setups that we look at and start a machine learning algorithm that can create trading odds based upon the statistics of what's happened historically. So that's kind of been the main driver behind what we do here at Investiquant. We use statistics on all the markets, mostly the futures markets. And we create daily statistics that can be used by traders and which we use for our own trading that we've turned into auto trading programs. So that's kind of what we use them for now, is mostly auto trading, but the statistics work very well, and they've been good to us.
I figured that what we're seeing on the PYT website is just sort of like a tease, if you will. So,
yeah.
But here's the thing. People need to find it valuable in order to want to see more. So that's what, like, my little head, I was like, oh, well, there's got to be something here we can use. Whether or not we decide to see more, completely up to somebody else. But these statistics must be valuable, because that's what would make people want more. So
exactly.
Okay, so you're probably watching us right here. If you scroll down a little bit, here are the quant stats. So basically, for I'm just going to scroll through real quick. ES, NQ, the Dow, small caps, oil, so forth and so on, right? So what I did last night, and what I've started doing now is sort of just to see what's going on, is I look, and Matt, you can tell me whether or not I'm doing this right or not. I'm just saying what I do. But what I do is I first start looking at the highest probabilities here. So 50-50 isn't that exciting. When we get to 60%, that starts to get exciting for me. So I first start to look at this, the probabilities here, and you're going to notice that everything is phrased in the affirmative. So if it opens up, the probability closing above is whatever percent. So you can trade to the downside, obviously, but you want the highest percentage possible if you're looking to sort of try and take advantage of this. That's how my first tier is percent wise. So I go through, I see for NQ now 63.83%. That's pretty good, and I just try to find that first, and then I look for the profit factor to see whether or not it's something that, if it does have good odds, is something that I can make a fair amount of money on. If you want to just explain from a very basic perspective.
Yeah, let me take it from here. In fact, why don't you go to the one to the left? I prefer S&P. Just my bias.
Oh, I'm just kidding.
Nasdaq's more fun, but
I've been on a tech kick lately. I like a couple weeks ago, I said I'm going to short oil and go long tech, and so that's why I'm a little tech biased. But anyway,
gotcha.
Okay.
All right, so this is laid out with a couple pieces of information that's really important. So the first thing that you really need to pay attention to is right there in the center. It says the prior close, and that is probably the most important thing to pay attention to when you look at these odds, because the odds that are going to be applicable for the day's session is going to be based upon where the open is for today relative to that prior close. So that's saying there for the S&P that the prior close was 41.45 quarter. This morning we opened around, what was it, 21?
Yeah.
21.25. So since we opened 21.25, that is below 45 quarter. That means we need to pay attention to the one on the bottom. The one above that is completely irrelevant. That means nothing today because we didn't open there.
Okay.
So now that we know where we opened, what we want to do is look at those odds. And this one's saying if opening down, which we did, the historical odds show a 59.94% probability of closing above the open by the end of the session. So by 4 o'clock this afternoon, there is a historical probability of about 60% that we would close above the opening print, which today was that 21 quarter area. And then below that, you see the profit factor, which says 1.46. So what that means is the easiest way to kind of think about a profit factor is this has made about 46% more profits than losses historically, because a profit factor is a measure of profitability. And what you're doing is you're taking the gross profits of all trades in your sample, and you're dividing that by the gross losses of all trades in your sample. So say you do a back test and you see that this setup has made $146 total over all of the trades for its profits. And if you look at all the losses, it's lost $100. When you do that math, 146 divided by 100, you're going to get the 1.46. Now, I just threw that out there. That's not actually the
Right.
numbers that are going into it, but that's how you would come up with a 1.46 profit factor. And what I like to see is a big profit factor, because those are more indicative of big days taking place within that sample size.
Now, when you say big days, do you mean big ranges or
big moves, like an open to close move?
Okay.
So it doesn't really matter what the range is. Now, generally, if you have a big range, the probability of closing well beyond the open is going to be higher. Yeah. Right.
Okay.
But that indicates the bigger moves, and you're more likely to see trend day type of days when you get those really big profit factors.
Okay. So you know what's interesting, and I don't know if you're an options person or not, but I was chatting with somebody who's been trading these event contracts with me since they came out, and his strategy has been to look for the biggest profit factor and then to take a straddle around that. So that's pretty much he's doing it right. That's smart.
So if you're taking a straddle there, you're looking for a big move away. That would make sense.
Yeah, his name is Mark Brandt. Everybody, just so you know, I don't want to, I want to give credit where credit's due. But yeah, he and I have been DMing back and forth. He's sort of helping, coaching me through learning how to trade these event contracts successfully in a consistent way. And because, I tend to be sort of, I can get a little bit degenerate. So he's which is why I usually stick to futures and, something I can incremental profit. But yeah, no, he's that's a really good idea. Okay. And so now is the 59.94%, is that like is that good? Is anything okay?
Yeah.
What is good?
Generally, when it starts getting north of 55%, for the S&P markets, that starts getting pretty good. You'll see bigger numbers like on the NASDAQ. It's not uncommon to see that dip into the 60s, mid 60s, which would be really good. You don't see that as often in the S&P data, but you can see it more in some of the other markets. So generally, if I'm looking at those stats for good odds, I like paying attention to anything north of 55% on a win rate. And then the bigger the profit factor, the better. If the profit factor is like 1.3, that starts catching my attention. And then if it gets bigger than that, that's even better. And the idea is to kind of trade in that direction. Okay.
So really the first thing I do is I kind of a yes, no, are we gapping up? Or are we gapping down from the open, right?
Right.
From the close the day before. And then the next thing is look for the odds and whether or not they're 55 or greater. And then the next thing is to look for the profit factor and if it's 1.3 or greater. And then you've got pretty good odds, right?
Right. Then you've got history on your side. And these are historical probabilities. It doesn't mean that it's going to play out exactly like it is, but it's based on a significant set of data going back, 10 plus years. So essentially how those odds are created is we're looking at very similar market conditions, and we're using a lot of calendar and seasonality factors in these odds specifically. So, one of the things that it would be taken into consideration is that today is Monday. So that's one of the factors that's going to be in there. And
yeah. No, I'm excited because when Anthony first told me to look at these stats, and I was like, well, my show is Monday. Is it going to work? Like that, literally, that's what I said to him, because, it's different when you're talking about a gap, gap up, down. It's a little bit bigger Monday than it is every other. Yeah. Every other day. It's like, but Mondays.
It all makes a difference.
Yeah. Mm-hmm. But you do take that into account.
Yeah. Yeah. So we're taking that into consideration. We're taking the part of the month, at the early part of the month where you got, seasonality inflows, you got the end of the month and the middle of the month, all that stuff is all factored in there, as well as what part of the year. I mean, there's all kinds of stuff that's going into it, as well as, different market conditions. Are we in a strong market, a weak market? Are we in a sideways market? So there's a lot of stuff that's going in there, and we're essentially categorizing each day so that it's falling into a similar bucket, if you will, of similar days. And then we're looking at what has the odds been when we are in these similar conditions for each of the systems.
I love that. I absolutely love that. And I'm really looking forward to using this. So I have sort of a chopped to slight bullish bias for today for NQ, just because I looked at this, also because I think so. But yeah, so I am really looking forward to using this in my trading. I love that it's free. And I love that if we wanted to drill down and potentially use your tool to do something more sophisticated, we could. So that's amazing.
Yeah. It's a great tool to have in your toolbox. It's probably not the only thing that you want to use, but it is quite powerful, and I have seen people use it alone and make very good money off of it. So we're not a one tool's best for everybody type of place here. We think you can use all kinds of things that will work well together, and this is just one of them.
Well, thank you so much, Matt. I appreciate it. Thank you for giving us access to these statistics. I can't believe they're free. It's so good right now. Anyway, thank you so much. And okay, everybody, you can follow Investiquant on Twitter if you want. I linked to it in my tweet earlier, so you're welcome to follow them if you'd like. Follow the Place Your Trades Twitter as well, please. And if you want to follow me, I would appreciate it as well. And okay, everybody, have a fantastic week, and we will see you next week. Okay, bye.